What's good everyone, welcome back to another video on the YouTube channel, and this video is going to cover two 50k accounts that I passed and got to a payout. In this video I will be breaking down the trades that got me to the payout, so if you guys have not watched my video already about the 150k challenge that I passed, I do cover the risk management approach that I do use. So it's pretty much the same when I'm trading futures accounts. I risk $250 per trade. So on both of my funded accounts, they actually went into drawdown. So the first trades that I took on my funded account, they were already down $250. However, I did get the accounts back into drawdown, of course, and they are in for a payout now. But I am going to break down the trades that I took, which were A+ setups for me, which got me in profit for the account. So I did take a loss on the first trade on the 50k account. However, I got them both back to 2.1k. So this is what you need for the profit buffer. However, in this video, I'm just going to cover the trades that got me above this buffer and got me the amount that I can withdraw from the account. So before we get into the video, I'm going to post both of my accounts on the screen right now, and I'm going to show you guys that they are in profit and above the buffer. And when I get paid out, I will let you guys know on the community tab on YouTube. And I also want to let you guys know that I have posted my TradeZella reports from May to June. And that's all the trades that I've taken on my funded account. So I posted them inside of my Telegram group. So it's extra transparency over to you guys that the guy you are learning from, which is me, I'm actually making money from these markets and I'm making money on a consistent basis. Unlike most of the educators out here that are teaching people how to trade, however they can't trade themselves. With that being said, let's cover the two trades that got me above the account buffer. Okay, here we have Nasdaq, so you can see that we have buy side liquidity resting above these highs. So this is where I was looking for the market to go, as on this day we had 8:30 news. So if the market reached up into these highs, this is where I was looking to sell, and that's where I did sell from. So you guys can see the next important area from here is the midnight opening price. And all I did was wait for the midnight opening price to close. So you guys can see that this is the midnight open. So anything above this is a premium to sell, and anything below this is a discount to buy. And you guys can see that we have a flat body low. So candles without a wick are a good draw to the algorithm. It looks to rebalance them. So you guys can see that I was already leaning towards a bearish bias. I just needed this high to be taken out. So this trade was taken on the 18th of June. And all I did from here was wait for the 8:30 news. So this line right here, this is where I've marked out the 8:30 news, and all I did was wait for that time. Okay, so as you guys can see that this is midnight opening price and we are above midnight. We've made equal highs. However, these highs are an SMT with the S&P 500. So ES traded above this high, which made the SMT right here. So because of this, I was already looking for shorts, and these lows were an easy target to reach into. And I will show you guys the SMT on ES right now. Okay, so the SMT wasn't with ES, it was with YM, and you guys can see that YM traded above those highs that we were looking for in NQ, and then that's what made the SMT. So this showed that NQ was a weaker market to look for selling opportunities, and that's what I did. So after the 15-minute chart, I moved on to the 1 minute, and I looked to enter and target the sell side liquidity. Okay, so on the 1 minute chart, you guys can see that this is a clear market maker sell model, and we have sell side liquidity below these lows. This was the up close candle that I was looking to sell from. So once price trades into there, this is where my selling opportunities will be. And my stop loss was above this candle's high, and I was targeting the sell side liquidity. And this was a 1 to 2.3 trade, and all I did there was wait for price to trade into my sell limit. And you guys can see that we accumulate inside of here, then we break down lower. So from here, this was another fair value gap that you could have sold from. However, I didn't. I just wait for the market to either trade to my stop loss or my take profit area. So you guys can see that we trade up higher and we get close to my stop loss because I didn't expect the market to trade above this. Why? Because this is an intermediate term high. This is because we rebalanced this fair value gap. So this is a safe area to place your stop loss. And as you guys can see that we break down and we trade into the sell side liquidity pool. So this was one of the trades on my 50k account that got me to a payout. And now let's go over my other account which got me to a payout and above the buffer. Okay, so this was another trade on my other 50k account which got me above the buffer and in profit. So you guys can see that we have buy side liquidity above this high and this high right here. I'm disregarding this candle because it was a manipulation wick. So this was just a stop hunt. So normally when we have a candle like this and it just does a stop hunt, just picture this as nothing's there. And we have this high right here, this high, and these equal highs right here. Just disregard this candle's wick. The only important area is 50%. And you guys can see we trade into 50% and trade away. So the high and the low, just disregard that and only focus on 50%. So as you can see, we had the buy side liquidity pool, which was right here, and then we had an SMT with ES. So below this low, this is where the S&P 500 took the sell side liquidity. However, the Nasdaq failed to do so, so it showed that it was the stronger market and it wanted to go higher. And all I did from here was wait for the 9:30 open, and you guys can see we trade lower, then we trade higher. As we closed like this, I moved on to the 1 minute time frame, and I was looking for buying opportunities inside of this gap. So this is where I bought long, and my stop loss was below the breaker candle's low, and I was targeting the buy side liquidity. So I was aiming for a 1 to 2, and all I did from here was let the trade play out. So whatever it does, it's either going to be a stop loss or a take profit. And I wasn't looking to add any more positions because you can see that the market was very choppy. So if I was going to add any more positions, it was because it was either going to stop me out prematurely and then run to my take profit area because I knew that the bias was bullish. So as you guys can see, we start trading lower, then we have an expansion to the upside. So if you wanted the pyramid here, this is where you would have taken a loss. And you can see that my stop loss placement was below this low because it's an intermediate term low, and then it was below this breaker candle's low as well. So this is because if price wants to go below this low, the breaker should hold it up and it should still continue to the upside if we are bullish. And all I did there was just let price action play out until it reached my 2R take profit. So as price reached into 1:30 PM, this is where I closed the trade and I went on with my day. So I took the profits and I left. This is because it was getting late into the session and I didn't want to hold for any longer. So in this video, I went over 2 trades that got me above the buffer. These 2 trades were the ones that I took when I was trading above the buffer so I could withdraw any profits. So I hope you guys found this video useful. If you have any questions, leave them down below. And as always, thanks for watching.